Here on the Clara CFO channel over the past few weeks, I've been giving you guys videos on how to improve your cash flow, how to forecast your cash flow, how to think about the metrics that you need to track to give you an indicator of whether or not you're going to have a cash flow problem. And then we've also talked about, what type of cash flow forecast we need to use. Is a monthly or weekly better for you? But I can give you all the tips in the world how to manage your cash flow, but it's not going to matter that much if your pricing is not correct, because if you're just not charging enough for the services that you're rendering in your service-based business, then you're always going to be running into cash flow problems. Because if we're not priced properly, then we're just in a situation that we're not able to cover all the expenses in our business, and then you're going to have a constant cash flow problem. So if you have been watching my videos and you're like, Hannah, I'm doing all the things that you say. I am taking deposits. I am invoicing as soon as I possibly can. I am monitoring my accounts receivable. I am tracking these things. I'm trying to get my utilization up, and you're still having cash flow problems, then you might have a pricing problem. So that's what I want to bring to you today. We're going to talk about pricing, and specifically a pricing floor for your services. And because pricing can have lots of different aspects to it. So what we want to calculate today is what your pricing floor is for your services. And so I'm going to give you some tips, and then I'm going to show you a spreadsheet that you'll be able to download for free. And I will walk you through some things to think about so you can make sure you are priced properly for your services. Just in case you don't know who I am, my name is Hannah Smolenski. I am the founder of Clara CFO Group. If you've been watching my videos for a while, you've probably been watching me on the other channel. This is the new Clara CFO channel. The old channel is now called Financial Tech Lab, so you might still be following us there, but we're trying to build up our subscriber base here. And I know a lot of you followed from the other channel over here. So just make sure you're subscribed to the channel so you can get all these tips that will ultimately help you in the financial side of your business. Well, pricing. Okay, so I'm going to take you guys through a few slides that I did recently for our Financial Clarity Accelerator program. So in Q1 of 2026, we launched our first ever group program, and I've been delivering weekly webinars to the group there, and it's been great. It's been so wonderful. So if you're interested in thinking about maybe joining a program like that in the future, I will put the link down in the description below so you can check out Financial Clarity Accelerator. We're going to go ahead and start a wait list because we're going to do something in 2026 into 2027. Just not totally sure what that's going to look like yet. But if you want to be informed of that, make sure you're on the list. But I was delivering a whole module. We did an hour's worth of teaching around pricing. And there were a couple of these concepts that I was like, you know what? I've never talked about this on the channel before. It makes sense for me to bring this to you today. So we're going to talk through what goes into pricing as a service-based business and things that you need to think about, and some of the things that people are really missing oftentimes, and oftentimes why we're not able to achieve the financial results that we want is because we're just not factoring everything in when we're coming to our price, and we're pricing too low. And then we are having challenges, okay? And cash flow challenges is one of those. So I'm going to walk you through a couple of these slides. We're going to talk through what goes into pricing, and then I'm going to show you that calculator I told you about, so you'll be able to download that for free. All right, well, let's go ahead and dive into these slides. All right, first of all, what I want to share with you is what goes into a service. So this channel is specifically devoted to helping service-based businesses improve their financial health. So what goes into a service, and what do you need to think about when it comes to pricing? Well, the short answer is everything. Everything you're doing in your business needs to be considered in order to make sure that your pricing is correct. So just because you're spending some money on office supplies, or maybe you're running out and getting that extra meal for your team, all of those things actually need to be factored into your overall cost structure and thinking about how that relates to your pricing as a business. So what I'm just going to kind of give you high level here, what goes into a service. We like to separate this into direct and indirect costs, or we can also call that cost of goods sold or overhead expenses. Okay, so we're going to dive into those two things in the next two slides. But what goes into a service? We've got direct labor. That's going to be, if I am a marketing company, that's going to be the people who are directly working on the marketing clients, and they are doing the work. They are doing the, ad design, they are doing the graphic design, they are doing all the things that go into delivering a marketing service. That would be direct labor. Your direct supply costs. So if I am a painter and I am painting as a profession, then, the actual cost of my paint, my brushes, my rollers, even if they're disposable, all that stuff is direct supply costs. Things like prep time to get ready to do your work, that should be included. That's a direct cost. Any revisions of your work. So maybe you deliver your work to the client and then they say, hey, I want you to come back and do this another round. Like any revisions that are part of your contract need to be put into thinking about what that time requirement could be, and that would be a direct cost. You also have payment processing fees. So most of us accept credit cards for our services, and if we do, that's oftentimes about 3%, 3 to 3.5% typically. So those are direct costs that you kind of can't really do anything about besides moving people to cash pay, but that is a direct cost of service. Project management. If you have a project manager who's helping make a project happen, that time that's oversight is a direct cost to the project. Your software tools. Now these can be direct or indirect. Like for example, at Clara CFO, we use a financial planning and analysis tool, and we have to get a new account and we're charged more money by that software company every time we get another account and we get another client. So that is a direct cost associated with serving that client, because if we take on a new client, we need a new instance of that software. So that would be an example of a direct, but then we use something like Asana for our project management and our task management in our business, and that is more of an indirect cost, but it does help us overall, run the business better. So it's important and it's part of our cost structure. It's just not a direct cost, it's an indirect cost instead. So it's part of overhead. Owner's oversight. So the time put in by the owner, whether they are overseeing projects or they're just like running the business, that is part of the cost of running the business. So that needs to be included. Any admin time, like we have an administrative assistant on our team, her time would go into our overhead cost and is an indirect cost to the service of providing CFO services. Any communication time with your client, like maybe you're not tracking every single email, but communication with prospective clients, communication with your clients, communication across the team, all of that is part of that indirect overhead time. Some people might call communication with clients direct, which totally makes sense. So this could be direct or indirect. And then sales time, this is the time that you're trying to get new business in. That's an indirect cost. If you have a sales team, that can be a very high cost. If it's just the owner going out and doing business development, that's still a high cost because that is their time being taken away from doing other things in the business. So that sales time is very important. It should be factored into the overall pricing. And then again, like advertising and marketing as well is another indirect cost, but very important to the overall function of the business. So this is not meant to be a comprehensive list, but I'm just kind of getting you guys to start thinking a little bit differently about what goes into a service, because maybe you're just thinking about these direct costs up here and you're not always thinking about these other things that need to be factored in, okay? So cost of goods sold. We often hear about COGS more in product businesses because you think, hey, if I'm a t-shirt company, every t-shirt I sell, there's a direct cost associated with that unit of making the t-shirt and shipping it out to the customer and whatnot. Like that feels very tangible and very direct. On a service-based business, we can call this cost of goods sold, we can call it cost of sales, we can call it cost of service, whatever you want to call it, it doesn't matter. Functionally, it's all doing the same thing. So for a service-based business, you're going to be putting things in here like employee labor costs, contractor payments. If you are hiring a contractor to come in and help with a project, that is a direct cost associated with that income. And so that should be included. Any materials associated with doing that project would also be included. And then I put things into cost of goods sold like your payment processing fees, because you would not have those payment processing fees if you were not receiving revenue. So I like to see that in cost of goods sold because that's coming usually just like straight off the top. Sometimes we don't even see that money coming in. It's just, the income's there and that payment processor will just take it straight out of your account. Just to point back to the profit and loss statement, your revenue minus your cost of goods sold equals your gross margin. Okay, so revenue minus cost of goods sold equals gross margin. And I just put a target here for you guys. A gross margin target for most service-based businesses should be 60% or higher. Now, this is when you have all your direct labor included in this cost. And I would say like this is not something I see very often, but I also don't see service-based businesses often hitting their profit targets. So we want to see a total profit of about 20% for, that's like revenue minus every expense in the business. We would like to see that to be at least 20% for service-based businesses. So to get to that point, you really need to be close to 60% in your gross margin, typically, unless you have very, very, very low overhead costs. Often what I see is that people are kind of optimistic when they think about how much margin they can really share. So let's just say that you are a therapist and you run a therapy business and you start to think, hey, like this business is really working for me. If I bring in new therapists, I can do a revenue split with them and I can give them 60% of the revenue and I can keep 40 and it will cover everything that I need. But every time I see that 60-40 split going in the direction towards the employee rather than towards the business, I always see margin problems. So, at least 50-50, I would say like at a minimum, you need to be looking at this at 50%, but really try to target closer to that 60% and you'll be in a much healthier position. And that is with all your employee labor included. Now, if you are a sole proprietor and you're doing most of the labor yourself, you need to kind of factor in like, what is the cost of, do some side calculations and say, what would it cost for me to hire somebody else to do this work? And then do the calculation and say, is my pricing correctly? Because you might be thinking you're quote unquote free labor as the business owner, but you are absolutely not free labor. You should be paying yourself really even more than what somebody else could come in and do this work for. But oftentimes as small business owners, we don't do that. We kind of, for a long time, can consider ourselves free labor. And I just don't want you guys to have that problem, okay? Because you won't be able to pay yourself well as an owner if you are doing that, okay? So this is all with the intention of like, hey, let's improve our margin. Now, there are gonna be some businesses, like I said, that maybe don't have a 60% or even 50% gross margin, but they keep their overhead really, really low so they're able to hit their overall profit targets. So if that's you, fantastic. I love that for you. And then, if that's really good, then you can share more of the revenue with your direct labor employees, okay? Which is great. Love that for you. Not all businesses are able to streamline super tight on their overhead. So let's go into overhead next. What are overhead costs? So revenue minus cost of goods sold equals gross margin. And then we have operating expenses after that on the P&L. And this is going to be your operating expenses are all your overhead. This is the stuff that you would have to pay whether or not you're serving clients. So things like your rent, if you have admin staff, marketing for the business, software licenses, insurance to cover the business, the owner, is their owner salary? Are they on a W-2 or do they need to take a draw out of the business? Either one. We're going to talk about that in a second. And then all the hours that maybe you have people on your team, you're a marketing business, and you have people on your team that are spending some of their time, most of their time, directly serving clients. But then they have, that team meeting, they have, that, business development lunch that they went to. They have kind of these little admin hours here and there that aren't directly billable to a client. That is also considered overhead because that is not directly going towards creating more revenue, okay? And then any other operating expenses you might have. So like I mentioned, office supplies, if you have to buy some more office equipment, the printer ink, the toner, the things that you just need to run your business every single day, the, meals that you bring in on Friday for the team, all of those types of things are going to be considered overhead as well. So the more you can shrink your overhead costs, then you can move more money up into paying, your direct labor. But a lot of times the overhead costs can only shrink so much. And, we need to make sure that we price appropriately to include this overhead, okay? Now, the other piece I want to mention that people often forget about is thinking about owners' pay. Are the owners being paid high enough with all things considered, okay? So this is like one of the things that I see missing the most. Now, I see this more with smaller businesses, but if you're in the multi-million-dollar range for your business, maybe this is not an issue anymore for you because maybe you're paying your owner on a W-2 wage. Maybe you've moved your business into an S Corp or a C Corporation and your owner is being paid through, or owner or owners are being paid through W-2 wages. If that's the case, that's good. But what you might find is that your owners might need to take a draw on top of their W-2 salary. If those owners need more money coming out of the business, you need to factor that into your cost as well, because you need to create extra profit in order to pay out an owner some extra distributions. Okay, so you need to think about, like, what does this owner actually need in order to live the life that they're trying to live. Now, sometimes we have to have hard conversations with the owner that they're living way too lavishly for what the business can realistically do. But if we're not really factoring in what the owner really needs at home, then we're not able to price properly. Okay, so whether your business is an LLC, taxed as a sole proprietorship, or you're an S Corp and you're paying yourself on W-2 wages, either way, you just need to think about the owner's compensation and not necessarily what the owner has been paid in the past. If that is not enough, you need to think about what the owner truly needs. Okay, so I just put a little note down here. Consider removing W-2 wages from the operating expense and use a desired owner's compensation number instead of what it actually is, because oftentimes owners are not paying themselves what they really truly need. Okay, so all those things go into pricing. Okay, so the next thing I want to show you guys is this pricing floor calculator. So this is just a quick and easy little calculator that we spun up for our Financial Clarity Accelerator group. And I thought, hey, why not give it to you guys as well? If it can help somebody out, I'm happy to give it as a free resource. So you can go to claracfo.com/pricing to get this calculator. And that's going to be completely free. If you want to get on our email list, you can. If you don't want to, you don't have to. You can opt out of it, but you can go ahead and download this pricing calculator for free. This is a way to calculate this pricing floor. Now, the pricing floor just means, like, this is the minimum amount that you need to charge for your services. Now, pricing has lots of different things involved in it. There's a lot of consumer behavior that is part of pricing. There is, the market to consider, like, what can the market truly bear? Like, there's lots of things to consider when it comes to pricing. So it's not just totally a math problem. And actually, it shouldn't be just a math problem. You should be kind of understanding what your minimum pricing should be. And then your actual pricing could be way above that, kind of depending on where you sit in the market. What is your positioning? Who is your customer? What is your environment? What is your market, your actual economic market where you are? There can be lots of different factors that go into it. But what I want you guys to understand is, what is that minimum pricing? Because I think most people do not have their minimum pricing correct. So this is what we need to think about. So I have a blank calculator here for you, so you can fill out your own thing, but I'm going to walk through this example. So we're going to take an example of a small painting company, okay? And they typically take on jobs that are about $10,000. This is the current price of their job, and they can take 24 jobs per year. And so this is like current price and then projected annual sales volume. And then this is projected annual revenue from this service, okay? So this is just to say, like, hey, we can basically take on a new client every 2 weeks. And then we're going to go ahead and fill out what we think the direct cost is associated with this. So let's say this is one person for 75% utilized for 2 weeks. So they are spending, 30 hours a week. That's 60 hours total. And they're getting paid $25 an hour. And then there's another contractor that comes on the job and helps out here and there. And that's another $1,000 for this, per unit cost. And then the job typically has $750 of materials. Nobody come at me that these are inaccurate. This is just an example. These are the direct materials. This is the paint. This is the brushes. This is the rollers, all the things. And then maybe some other direct costs per unit. This might be maybe gas going to and from the job site, for example. So we're going to say this is all things together, total cost of goods sold per unit is $34.50. Sometimes I see people just taking this direct labor number, multiplying it times 2 or 3 and thinking that's going to be enough. And even if we took both of these contractor costs and this, so even if we took all of this together and we multiplied it times 2, it's still not going to be enough, okay? So you might think, hey, Hannah said 50% margin, 50 to 60% margin, so even if I multiplied this times 1.6, that's not 60% margin for one. But even if we were targeting maybe a 50% gross margin, we just took cost of goods sold and then we multiplied it times 2, this would be $6,900. That's still not going to get us to an ideal pricing number. So this would not be enough for us in this situation, because we need to think about our annual overhead costs and we need to think about our owner's compensation. So if I take annual overhead, so this is looking at your operating expenses in your business. Now, this would be very helpful if you have a budget, because if you have your budgeted expenses out for the coming year, that's the number you would want to use for, not necessarily your actuals from the prior year, because that number might be potentially a little bit different depending on what happened. And you should be thinking about like future growth or what your current situation is, not necessarily what your past situation was. But if all you have was your past overhead expenses, which would be your operating expenses, I'm just trying to simplify that here for you guys, then you could use that number and maybe, put a growth on it. So maybe if you had $40,000 last year, you could maybe add 10% growth just to be conservative. I just threw out, again, 10% as a number, not saying that that's what everybody should do. You should think about what your business is doing and see what number would make sense to increase that by. If you're trying to increase your revenue by 30%, maybe it makes sense to increase your operating expenses by 30% as well. And then we have this annual overhead number, and then we allocate that per unit. So this is 50,000 divided by 24. And then we put in here our desired annual owner compensation. So if it has not been calculated into this annual overhead here, then the desired annual owner compensation needs to be added. And so that's another $4,000 per unit. And then we need to add a profit target on top of that. So then we're going to add 20% profit on top of that. So all of these things together, when we add everything up, this creates a minimum sustainable price of $12,125. Now we could get into a philosophical conversation about whether or not the owner's compensation needs to come out of profit, and maybe we don't need both a $100,000 owner compensation and a 20% profit margin. But what I'm doing is I'm just giving you guys an example here so you can play around with the numbers. All of these things, once we add it all up, the price was $10,000 per unit, but actually the minimum sustainable price is actually $12,000 to accomplish all of these things. Now, if we did things like, hey, maybe we were able to reduce our overhead by a little bit, and maybe the owner doesn't need 100,000, maybe they just need 90,000. Then we can go in here and say like, okay, maybe the minimum sustainable price is different. Maybe we don't need a 20% profit margin when the owner is making this much. Maybe we can make this 15. So the calculator will adjust for you, but all of these things are still indicating, even if we bump all those things down, that the pricing that they did have was still not enough to cover the costs. And so then after I change some of those variables, the minimum sustainable price is a little bit higher than what they were charging at the current price of $10,000. Okay. And it says down here, is the current price above the pricing floor? No, it's not. You need to go and make adjustments. Okay. So I hope that this calculator is super helpful to you. Again, you can go and grab this by going to claracfo.com/pricing, and you can get your free copy of this. Just go ahead, and if you want to be on the newsletter list, you can. We'd love to have you there. We send weekly emails with our videos from the Financial Tech Lab and from Clara CFO, and then we send reminders and different things that can be helpful to you. So it's not a bad thing to get on the email list if you aren't. And let's see, I think that's about it for today. Hopefully this has been helpful, helping you understand the pricing floor for your business and understand this is the cost method and teaching you how to do pricing. So hopefully this has been helpful. If it is, please give this video a thumbs up. Please share this with a business owner that you think might be helped by this information, and I will see you guys in the next video.